Hello, fellow traders. 'Tis I, the Rumpled One. It is Thursday, May 17, the year 2018. Expect the unexpected. Some of you already know, and for those who don't know, I live in a rural part of the great state of Oregon. My internet connection is through Verizon. I have what's called a MiFi device, which puts Wi-Fi in my home. And I can also use my cell phone as a hotspot. Yesterday, there was no reception. Zero, zip, no bars, and X. Why do I mention this? Well, you see, if I had a trade on and I didn't have a stop loss set and I didn't have a take profit set, do I need to tell you what could happen? Could have been wiped out if the trade went against me. Could have, come back to a nice surprise and it went my way for, 100 pips or more. But do you really want to take that chance? Could have missed an opportunity to say maybe take 10 or 20 pips only to see the stop loss hit. Oh, how would that one feel? So that's why you have to expect the unexpected and account for it. So you're sitting there trading and you think everything's hunky-dory. What if your internet connection is severed? Do you have a backup? And the funny thing is, it hit me like a ton of bricks. I needed to make sure I had paid my cell phone bill because I had to close and open new accounts at my bank because there was some suspicious activity going on. So my cell phone provider didn't have my new bank account to do a debit on my card. So I thought maybe that's why the service went out. So I ran into town. I went to the Verizon store and I walked in and go, "Oh, you don't have any signal?" I go, "No." And I thought maybe they just knew I hadn't paid my bill. They go, "Oh no, it's across the whole region here." So that's just something you have to account for because most likely it doesn't even cross your mind that that connection could go out. And that's another reason why I don't like EAs. And see, that's part of risk management. You see, by realizing that there's a risk that the internet connection could go out is why you employ a stop loss. But you guys know that, right? Okay, looking at the week, it looks like dollar yen is still moving up. 67, 66 pips now over last week's high. Did somebody get that trade? Looks like these two New Zealand pairs haven't really done much here. They were about this distance away yesterday. And today's Thursday. Doesn't look like they're going to close the gap. Oh well, you win some, you lose some, right? But look at the movement on the pound New Zealand off of the weekly open. Big time. Dollar yen, no slacker. Pound yen, no slacker for sure. And some euro pairs nice to the downside. And looking at the daily, you see here, boom. It closed near the top and just shot right through it. Not much of a wick zone at all. Just a nice trade. And we've got 5 pairs over 100 pip range for the day. Yen putting in a nice 78 pip range. Not too bad. And as we look at trading here, okay, time for the hairy hindsight segment. Oh, that just cracks me up. Okay, here, if you triggered in early, if you put your stop here, you got stopped out, otherwise no stop, and you were able to make a profit here. Here we go. You went short. It opened, it never tried, so you should have been able to exit with a small profit here. You trigger in, and you can see there's profit to be had. And that was it on the buy zone. And since these lines are the same, when it starts and when it ends, you could call it hindsight. All you had to do was enter the trade. And you can see right here, we've got red rat zone working here. Looking for a reason to short. Here at 110.65, that's the last place to get on. The red rat short. I was just thinking something. I bet you if I put that spread dots indicator on here, that might be pretty cool to definitely could help doing those trades. But doesn't have to be on that chart. Okay, there's the open, there's the pivot. See price hit the pivot, but it still hasn't hit this pivot. You see, sometimes it misses, and there's a missed pivot right there. Looking to come back to 109.50, be a 100 pip drop. And right here, you can see we've got buying going on, so no reason to sell. Okay, price action, you see the 3 ball, red at the line, you go short. So we got green at the line, you can go long if you want to. It wouldn't be a bad idea. You got green across the board, more green than red. And we trade with yesterday's 5 lines, which you can see these. These are pretty much like the wick zone. I mean, it's pretty much the same lines. You can see very narrow wick zone, but price doesn't like staying in the wick zone. But you know that if you've watched these videos before. And let me know, can you guys see that? I'm wondering if you can see that in the video. I might need to change that background. That's kind of, I don't know. What was I thinking when I did that? I was playing, I guess. Okay, you can see here, lowest open, boom. Highest open, couple opportunities. And you can see here, you could have taken probably about 20, 19 pips out of that trade. Not a bad trade at all. Had a little interesting action here, down and up and then back down. That's why sometimes I like to take those 5 pippers, then you might get another opportunity and get it again. So instead of 5, you get 10. And I've had the computer on for a while, and you can see here that the bid crossed above right here, went up a few pips, ask crossed below, triggered you out. Maybe you got a pip or 2 out of that trade, and that's how it works. And just on the time and sales, if it's gray, that means it's no different between the last tick. So you can see here, might be hard to see on the screen, but you got red, green, and gray because price didn't change. And it just goes tick by tick. Actually, somebody was asking about this. He had some ideas they like seeing it. And then another buddy, you know who you are, had some squiggly lines out there. These are squiggly because this is price. But they had some squiggly line indicators. I think they wanted me to work on them, but you know how I feel about squiggly lines. I usually don't do them. Because this is just a line chart of the close. But you can see here, we got buying. We're above the valley of the ask. And looking here at the IRBs, you can see here there was a movement across there. You had to take your profit quickly. Had some downside movement here, some nice profit to be had. Handful of pips. So many people snicker at a handful of pips, 5 pips or so. But who cares what they snicker at? That's if what their opinion of me and my trading is none of my business. It really isn't. I tell you, ever since I heard that saying, it just really is freeing. It's like somebody else's opinion is just, I don't care. Oh, and a funny story, I'm on the school board budget committee, and it meets at 10, and I'm sorry, it meets at 7 o'clock at night, and I got there about 7:01. I walk in, and usually I sit off to the side, and I'm looking for my name, and it's just like, oh, Avery, you're up here at the head table. I'm like, did you guys make me chairman of the budget committee? They go, no, but we will as soon as. So I guess it's a running, I don't know if you call it a joke, but whoever is late gets voted into a position. Because one time, a couple budget meetings ago, or budget years ago, I came in late and they voted me in as vice chairman. So you don't show up late to budget committee meetings unless you want to wind up chairing the committee. So yeah, I just find that amusing. Anyway, enough about that. Back to the trading. Okay, let's see. I think we wanted to look at something else, didn't we? Was there another pair we had our eyeballs on? Oh, let's look at the euro here. We're right around the 00 line. Or maybe, let's see. Let's look at the euro 00 line on the price action chart. So there we are at the 00. And looking for those few pips as we cross the 00. And was there another pair? Well, maybe let's see what's the pound doing. Once again, take these hour candles, trigger at the line, and sometimes you win a little, sometimes you win a lot, and sometimes you lose or you scratch. You know what? I was reading something earlier today, and it talked about the paralysis of analysis. And I guess there's a balance. Not enough analysis is being a little headstrong or failing to do your due diligence, and too much, basically striving to perfection and to not fail. That doesn't work. See, in trading, not every trade is going to be a winner. I mean, if you sit there and you just wait for that perfect setup, well, you know what? You're going to probably wind up being a skull and bones before it comes. So you just have to, trade when opportunities present themselves that have a statistical edge. Okay? Yeah, I should have turned my ringer off. Anyway, that's about it anyway. So, fellow traders, just remember to expect the unexpected, because it's not what you trade, it's how you trade it. So let's go drain the banks.